Moving on to uranium, though, every week I close off the video with an awkward joke, but also hoping, praying to sit down in front of the camera in my underwear next week and say that uranium stocks finally decoupled and my portfolio has exploded 50%, which sadly enough won't even make me break even. But unfortunately, this week has not been it. My portfolio is still double digits in the red, and only 2 of my 20 positions are in the green. Luckily, both uranium names, right? But unluckily, well, it's only 2 out of 20 stocks. So the URNM ETF is down about 1.5% in the face of the NASDAQ being up almost 2%. So no decoupling is yet happening, not in the way that we want it to be, at least. And all of this is despite the fundamental thesis getting even stronger, right? With the news coming out of Japan that their prime minister wants to have a total of 9 reactors operational by this winter, as he's concerned about the energy and the electricity supply of the country during the coming winter, naturally so. And to explain to me what's happening in Japan, what it all means for the uranium stocks, if anything, and when we'll finally decouple, I sat down with the one and only CEO of Cameco, Tim. No, I'm kidding. I sat down with my favorite financial advisor and psychotherapist, Justin Hune, the Uranium Insider, and here's what he told me.
It actually doesn't mean anything at all because that news was very, very confusing. So really, the situation that my understanding is as of now is that they have already restarted 10 reactors. Only 5 of those are currently operating right now because of maintenance shutdowns. There also were deadlines for, how do I say this? Like anti-terrorism measures that the power plants are required to have, apparently, at least in Japan. And it's possible a couple of those restarted reactors did not meet those deadlines with whatever the state wanted them to do for that particular requirement. So only 5 of those 10 restarted are currently operating right now. And what he's saying is he wants 4 more, so 9 to be operating by the time we get to the winter. So it isn't 9 more restarts that he's trying to accelerate. With all of that said, he is trying to accelerate the restarts, generally speaking. And so with 10 officially restarted since Fukushima, assuming, some of the shutdowns right now are temporary due to maintenance and whatever else, they are still shooting for 20 to 22% of their grid being nuclear by 2030. So that would be an additional 20 or so reactors restarted. And they're wanting to accelerate that process, which has been slow.
Do we think that they have enough supply left from their stockpiles, though, to do that this winter? And it's also a good point that somebody made on Twitter, was that even though if they have enough, fuel to restart those power plants, do they have enough to have their stockpile? Because, utilities don't want to be left out without any stockpile. So do we know anything about that?
I think it's safe to assume the operators of the reactors that have been restarted, even if they're currently undergoing maintenance shutdowns, have sufficient fuel to run, for this winter and probably out, multiple years. If they were to actually follow through in their plans of restarting up to another 22 reactors from here in the next, let's say, 6-7 years, certainly some of those utilities will need to seek out further supply.
Okay. And definitely by 2030, they're going to have to, have a lot more if they're looking to restart 20 additional. So where do they typically get their fuel from? Where does Japan buy from?
Well, the Japanese utilities will contract from all of the, any of the major players that any of the other Western utilities will contract with. So, up until recently, that would be Uranium One, Kazatomprom, Orano, Cameco, BHP, et cetera. So, and there's a number of traders and then carry traders, et cetera. So they'll operate in the open nuclear fuel markets just as any other utility in the West would.
Okay. And so what I saw yesterday, though, was that, we had a nice green day in the stocks. And yeah, that was yesterday, right? Thursday. So we had a nice green day on that day that the news broke. But then I looked at the URNM ETF this morning. It was down. Now it's slightly up. I mean, it seems to, the run seems to be cooling off. So you don't think that it relates at all to the equities besides maybe a little sentiment bump, or how do you look at it?
Oh, I mean, it's possible when the news came out yesterday that it was misunderstood, as it was by me initially. And perhaps there was a little bit of, maybe there's a little bit of volume coming in due to that, but it was really not a whole lot. I mean, honestly, not much has been moving these equities to the upside, and very little is moving them to the downside. The volumes are tapering off. It seems to me like we're close to kind of a point of just seller exhaustion here. These things can pull back substantially. I mean, some of these stocks are off by 30 to 40% since April, and are off, 50% plus since the last autumn highs. And some of the highs came in September, some October, some November, but generally speaking, late summer, early autumn, it's when the sector really peaked out as far as this bull run goes. So the pullbacks have been significant. We're sitting at valuations right now, when compared to the actual spot price of uranium, that we saw before the bull market started. That's how much these have pulled back. We're actually, if you were to chart URA relative to the spot price, you'll actually see we're at a level prior to December 2020, which is when I say that the bull market really started. I think the recovery from the steep sell-off and the COVID crash in March 2020, I wouldn't really call that the bull market. We really saw volumes come in, stocks start to move December 2020. And so now we're at levels compared to the movement of the spot price, which is up 50% since then, right? So the spot price is up 50% since December 2020. The equities are up more than that since December 2020. But relative to each other, we're right back. I mean, it's like we're in bull market phase 2 right now, pretty much.
Okay, bull market
beginning stages.
Right. That's why I was sort of asking that many questions about Japan, is because Rick Rowe will always keep on talking about Japan, even when he introduced he introduced that concept of Japan to my understanding of the thesis, and it was back in the summer of 2020. And then when I asked him, what do you think is the most important fundamental development in the uranium space right now? I asked him that like 2-3 months ago. He gave me the same answer. He said Japanese restarts. And so that's why I thought that it might be more important. But you're right. There seems to be a type of indecisiveness. Is that a word? If it's a word, it's too big for my brain. But so there seems to be indecisiveness in the market. Do you think that it has something to do with any of the other fundamentals within the uranium market specifically, or?
No, absolutely not. I mean, I think the indecisiveness is coming from probably a doubt that's shared generally by relative newcomers to the space. So let's say within the last 12 months, who've seen the equities go absolutely bonkers and pull back significantly, even though the fundamentals keep stacking up. It can be really frustrating for somebody with a shorter term viewpoint, or let's say shorter term financial needs in terms of their investments returning how they expect them to watch positive news flow on an almost daily basis and not see the sector react to it. So there's a lot of doubt around that for sure. But really, and to go back to your comment about Rick Roll, I find it kind of funny because in a way, he's always sort of been right. I think that he kind of didn't see that first leg of the market coming, and a lot of us didn't. I mean, some folks like myself and members of our newsletter were already positioned at the time before the sector took off, which was great, but it kind of took off on no news whatsoever. December 2020, the stocks just started moving and volume came in and volume chased volume. And then, it happens to be that the fundamentals continue to improve since that point. But really, Japan restarting isn't the most important thing that's happening right now. It is, if Japan follows through on what I just stated their plans are, then that's kind of like, that's gasoline on the fire. That's already, that fire is already starting. So really what's happening right now that's of utmost importance is the Western utilities seeking out Western enrichment and conversion, and especially enrichment, because that's the thing that that's one step away from their fuel, right? So you get your enriched uranium product, then that just has to be converted back to uranium dioxide powder and turned into pellets and made into fuel. Like that's the last step, right? Is that enriched UF6, that EUP. And Russia had 43, 44, 40-ish percentage of the global capacity for SWU. Now, the global demand for SWU is 70+% in the West. And the global capacity for SWU is less than half. So we have a serious disjunct between SWU enrichment and the demand for it. And the market is bifurcating right now. So you've got Russia producing a small amount of uranium, a decent amount of natural uranium or UF6, and a lot of enrichment. So we're already seeing Western enrichers raising their tails assays, which basically means the demand is very quickly growing for enrichment from the Western enrichers. And the only way that they can produce more EUP in a shorter period of time is to raise the tails assays and overfeed the centrifuges. And that's happening right now. And that is going to create a massive increase in demand for uranium. And that's, we're looking at weeks or months, not years from when this is going to hit. And so there's an important meeting happening in DC next week, NEI meeting conference. It's literally a half-day conference, and it's been organized on a relatively short time frame. And all of the players in the world of enrichment, all of the utilities, they're all going to be there. All the who's who in the fuel cycle is going to be there. And it seems like there's going to be some important information shared. There's going to be a player in the nuclear fuel cycle world who's going to be on our webinar next week, our members webinar, who's going to attend this event and going to kind of report back with our members. So we're really looking forward to that. But that's the most important thing. And if Japan's demand grows because of these restarts in an accelerated time frame, that just it sets off. I mean, so one of the main Western enrichers would be running, let's say, 0.18 to 0.2 tails assays typically over the past, let's say, half decade or so. And those have fluctuated a little bit. They started to climb a little bit over this past year. Well, they've already jumped up somewhere in the mid 20s, so 0.24, 0.25. And that's the percentage of U-235 that remains in the tails material after the enrichment process. So the higher that number, the shorter amount of time spent to create the EUP out the other end, and the more feedstock that is needed. They're already gone from 0.18, 0.19, 0.2 to 0.24, 0.25, with contracts likely higher than that, pushing 0.27, 0.28, maybe even higher. And it's going to keep going. And all that means is way more uranium on the front end is needed. And so when you actually calculate demand numbers for reactors, one of the most important elements in that calculation is the tails assay of enrichers. That will dictate how much uranium is needed on the front end. And over the years, when we've had lower demand for SWU and excess capacity of enrichment, the tails assays have been low. They've been able to underfeed the centrifuges. They've been able to re-enrich tails material to sell UF6 back into the market. That's gone. That's gone. So it's possible the Russians are still going to be, re-enriching tails and underfeeding their enrichment, especially if the demand for Russian EUP, which it is going to drop off. Chinese are probably going to be buying more from Russia, India potentially as well. The BRICS countries might be dealing with Russia. So there's still a lot in flux, but really there's been a line drawn, Russia, not Russia, in terms of the nuclear fuel cycle. And sorry to be rambling on about this. I just want to kind of put a finer point on it, which is the Canadian shipper that was disallowed to ship Russian uranium to the United States. This is 3 weeks ago or something like that. That shipment had to be canceled. Then we're hearing now that the shipment did go through because the Canadian government gave this entity a pass on the sanctions that will go through the calendar year 2023. So now the utilities that do have current contracts with Russian suppliers of EUP, under the limitations of the Russian suspension agreement given, now know that they can get their deliveries unless some other development comes along and we actually see firm sanctions, which we're unlikely to, because there are reactors that need those deliveries that actually will potentially affect the operations of the plant, which is why we haven't seen actual sanctions from the US. So now the US utilities that have forward contracts through calendar year 2023 know that they can get that material. And beyond that, there's your hard line. There's your hard line, and they're going to have to figure out something else. And the only solution is overfeeding and higher tails assays, and it's already starting. So really big demand for U3O8, UF6 is coming.
I can see that, and I think I understand it. I can see the fundamentals for uranium getting better and better every day. That's what I can see. And the fundamentals for the general market are getting worse and worse by the day, basically. Higher inflation and all that type of things, possibly, 100 basis points, rate hikes later this month and stuff like that. Yet those two markets, they move almost simultaneously. Like if you look at URNM and the NASDAQ, they move simultaneously. So there's a fundamental decoupling. It's already there. It's been there. What do you think is going to make the actual decoupling that is going to make a difference to me in my portfolio, though?
I would say that, well, if you're looking at day-to-day moves, it does seem like we are highly correlated to the broad market. And in some cases, we've got downside beta to the broad market. We'll actually see, S&P down less than 1%, URA will be down 3%, for example. We've seen multiple days like that. That's especially the case when we have these steep downdrafts in the broad market. It gaps down 2% and trades down throughout the day, and we'll see the ETFs off 5, 6, 7%. We've seen multiple days like that in late April, in May, even in June. But when the general market is softly weak, we have the potential to outperform. And if you actually chart that and zoom out a little bit, we have been outperforming the broad market, generally speaking, since the beginning of this bull market. More recently, there's been downside beta. How do I explain that? I don't really, other than the fact that, recessionary fears tend to not be good for commodities. We've seen uranium trade down on a day when oil is down $6 or $7 on West Texas. And all of a sudden he's like, what the heck is going on? I just read some great story about uranium XYZ, but oil's down, $7. Why are uranium stocks trading down? You can't explain it. The correlation to the broad market is there currently, and there's no fighting that. What moves it? Well, I would say just general risk on back into investments in general. So what we're seeing right now is commodities across the board and, stocks across the board have been weak for months and months and months. We've seen $35+ trillion of wealth wiped out this year alone. We've seen crypto and the large cap tech stocks get absolutely eviscerated. Some of these large cap tech stocks are down 60, 70+% year to date. Just unbelievable wiping out of wealth. So at this point, I kind of tend to think of, well, how badly can you get hurt if you jump out of the basement window? It's possible we go down further. I'm not trying to call a bottom here, but what I do think is we have this extremely unique scenario where the equities of this particularly small sector have been thrown out like the baby with the bathwater, yet we have an understanding of what's going on fundamentally in the fuel cycle and what's about to happen. So it's an unbelievably unique and exciting setup. But to answer your question, how do we decouple from this, generally speaking? Well, I would say if we see generally a move of volume and financial flows come back into the resource sectors in general, we actually see the metals get some love. If we see the dollar turnover, that is probably going to be positive for commodities in general, and uranium can possibly get lumped in with that. And or we start to see big jumps in the spot price. And I think that's possible. I'm not saying that's going to happen tomorrow or even next week, but that is going to happen. That is coming. And now is the opportunity to position at these crazy cheap valuations. Maybe we go down another 10%. I don't know. How far can you fall jumping out the basement window? We're already down. So we're already down 50+% since the highs. And we're back at valuations like the bull market never happened. It's like, oh, it's beautiful. I love it. I know it's hard for people to hear that maybe bought near the highs and they were expecting a return on their cash in less than 12 months or whatever. It's like, I know it's hard for you to hear excitement from people like me or from Rick Rule or from some of the fundies that are managing, portfolios of a couple $100 million that are uranium focused. These guys are foaming at the mouth too, So, but for the retail guy, it's frustrating. I get it.
Absolutely. And I don't want to give out too much of of your newsletter basically. But let's just assume that you've been adding into this weakness. I guess that's not giving out too much, right? Um, I'm just wondering how do you know when to add though? I guess like for example, I don't have as much cash anymore as I would like to be having. I think a lot of people are in the same position because when you I can imagine when if you found this sector a while back, 6 months ago, whatever, and when everything was going up or whenever it was, so the price was supporting the sentiment, and the sentiment was already very bullish, and the sentiment was supported by the fundamentals, which were great, and you sort of found this amazing sector, and you probably dumped a lot or all of your money into it at once, and now you don't have any or too much cash. Like I, for example, I don't have too much cash. I've just been adding up as I remain bullish, and but anyways, I don't have as much cash. And I'm just thinking, how do I know if it's okay to be adding right now, given that I already have a position? I've already averaged down a little bit about 5 weeks ago, but I don't have as much cash. And if a broad market crash comes along, I'd like to buy that instead, because I guess, in a broad deleveraging event, all of the stocks are going to be hurt, including uranium stocks. So how do you determine what and not what, maybe what, but also when to buy? Like, do you run NPV valuations, or how do you pick your moments?
Well, I think that, the when to buy right now is probably going to come from either a signal from the Fed or a catalyst that hits uranium and moves uranium uniquely, right? So, that's what everybody's betting on, is when is the Fed going to pivot and slow down on their hawkish rate hikes and QT, et cetera. And everybody, I follow a dozen extremely intelligent macro people because I'm not really a macro guy, and they all have differing opinions on this. So I can't tell you when the bottom is going to come. I don't know when the bottom is going to come. How I tend to look at it is, well, first of all, if you don't have any money to add to positions, I'm not saying you, but just, generally speaking, it's like, then there's nothing to do, I guess. It's just like wait it out and think, look at this market in terms of, even if you're down 10, 20, 30% on some positions, you're very close to the bottom in terms of valuations relative to the metal here. And instead of looking at cost basis, sometimes what I'll do is I'll say, okay, this is a company I know I want to own for this bull cycle. And I expect this bull cycle to kick off over the next few months. And I expect it to run potentially until we have expanded SWU capacity. I don't really know what slows this down, barring an unforeseen event. So let's say I want to hold this company for the next 2, 3, 4. Who knows how many years until we get expanded SWU capacity and start to see prices level off. I tend to watch rather than my cost basis, but how many shares I own of this company. And so if I can buy more shares on a day when it's red, I'm happy about it, even if it's going to go down a little bit more. So I just look at, okay, if I want to own, 2,000 shares of X company, and that's my goal, then I try to get there regardless of my cost basis. And I generally, because it's a fundamental investment and I have a long-term horizon, I never buy when I'm chasing something. I just don't like to chase. And so if it's something I'm watching, it's something I already own and I want to add to, it's like when stuff's bloody, I'll just nibble a little bit more on it. I also like to have some cash. So I have cash in other investments that I'm less convicted on. If uranium washes out more to the downside and things still look this good fundamentally, maybe I'll sell something that I own that I'm less convicted on in order to add to my uranium positions. Lastly, you can also hedge with a little bit of that cash. And if the market keeps going down, that hedge will provide some cash to add to your positions that are going down. So to sell here in hopes to buy lower is not something I would do. And I'm not trying to give anybody advice. I don't want to create a tax event and potentially miss, it would have to fall a certain amount in order for me to create that tax event, pay taxes on that sale, and be able to get such a lower cost basis from here in order to get my gains on that newly entered position and resetting that capital gains clock. Now that's different depending on what country you're in, but in the US, That's how I have to think of things. I don't want to reset that 12-month capital gains clock because I want to be able to trim or sell when things are much higher and pay that lower tax rate. So I have to consider that as well. But also, if you have a hedge, like maybe you put on a put spread on the S&P or something like that, if everything takes off and you lose on that 5% hedge, then you lost on that 5% hedge, big deal. Sell it at a 20, 30% loss and enjoy the gains you're making on your 95% long portfolio. If things drop another 10, 15% from here, and you've got a put spread on for the S&P, maybe you've doubled or tripled your money on that one position. You've got a little bit more cash to add a little bit more, buy a little bit more shares of these companies that you love for this run that you expect to go for 2, 3, 4 years. But most likely what will happen is something will trigger the uranium stocks to run, and you'll see a day where everything's up 20% and you'll go, damn it, I wish I had been more positioned, or I can't believe I was trying to tick that perfect bottom and now it's got away from me. Now I have to figure out, are they going to pull back after that 20% move, or do I have to chase it? It's like, that to me is far more psychologically difficult than holding on through these ups and downs. But that's just me. That's just me. Some people can't take the volatility, and maybe if you want to go to cash and hope that you get a lower entry point, by all means do it. I'm just not the one that's going to advise you to do it. I'm going to trade the way that works for me. That's to hold through volatility. That's to not reset my capital gains clock in the US here. And if I'm really bearish in the short term on the broad market, I'll put on a put spread hedge. And if it makes money, great. I'll add to my longs when it makes money. If I lose all of my money on that hedge, or I sell it out when things start to move up, that's fine because I'm mostly long.
That's a very sophisticated strategy. I'm definitely not one to be trading. Like I definitely wouldn't sell all, like go all on cash or something like that. What I am thinking though for myself, and that somebody smarter than me told me that, Lobo Tigre, and he told me that because I don't have too much cash, so I do have some cash, right? I could be adding, but he said even if you miss the absolute bottom and you have to buy 10 or 20% higher than what the prices are today, you're still doing extremely well because of how silly the prices have gotten at this point. So even 10, 20% higher, that's still stupid cheap, basically. But if you buy 10 or 20% higher with like a fundamental support, like something breaks in the supply chain even more, or more contracts have been signed, and let's say $60 long term and the spot jumps to 70, now you have a sort of a bottom line or something, you have a confirmation. And so the risk reward improves even though you're buying higher. Does that make any sense to you?
Sure. Absolutely. Yeah. I mean, I think the risk reward here is stupid. I think it's off the charts for uranium equities. So, I mean, full disclosure, I've been adding to my own personal positions over the past 3 weeks about as substantially as I ever have. And I can with my available cash. Also if you're concerned, if the volatility is causing a lot of stress, let's say, and you think that the markets are going to head lower, and they very well could, simply buffering, like selling partial positions and creating a little bit of cash buffer, will keep those swings from being quite as violent. And if it does drop, then you have some cash to deploy. So this is something that I've mentioned. I do something called the weekly watch list for members, where I just update the charts and kind of give a little bit of pontification on the markets. I do that every Sunday before the ASX opens. And over the past 2 months, while I basically just stated that it might be a good idea on these intra-cycle bounces that we see throughout the markets to create a little bit of cash and deploy later. So it's just something to be mindful of while we're in technically a bear market. For broad equities. And I mean, most of the equities in the uranium space are in bear markets too. They're trading well below even like all of the declining moving averages. Trend lines have been broken, et cetera. If you zoom out, they don't look that terrible, but in the short term, these are bearish charts. And so buying here is either, catching a falling knife, or making a contrarian bet, making a value fundamental investment that's based on either a company's valuations based on their pounds in the ground, their expected forward cash flow, et cetera, and the expectations of the sector moving. Now, it takes a lot of faith if you don't understand what's really happening behind the curtain. It really does. because you're not seeing a reaction in the equities markets to everything that's happening fundamentally in the sector. So, it is a leap of faith. It is a contrarian bet. But my money's where my mouth is, and I feel very confident this is going to turn around, and it's going to turn around hard.